Eric Mwather at mwather.com with world market analysis for the weekend of October 1st and October 2nd, 2016. Let's take a look at markets here as far as the Asian markets are concerned, and we did see, let's call it about a 1% pullback in Asian markets overnight. Take a look at how the euros closed, and for Friday's session, a little bit of a mixed bag. The biggest mover being the Dax, up about 1%. Other markets was unchanged for the most part. Take a look at the Americas. With about 2 hours to go before Friday's close, you can see the Brazilian market is up about 0.6. Canadian market up 0.18. S&P 500 is up 0.92. Let's take a look at those world charts. Before we go to the specific individual markets, one thing I'd like to point out for this video is my summary is most markets are stuck in a wedge, and I'll try and show that most markets are in some type of a wedge. But if I was forced to pick one direction, it looks like eventually this wedge, even though I don't know because we have to wait for that evidence, it looks like, generally speaking, eventually this wedge might have higher odds for breaking to the downside. So right now, to summarize this video, we seem to be stuck in a range, but looks like eventually the movement out of this wedge, trying to say the movement might be to the downside, and I'll show you why I think that. Let's begin by taking a look at the Australian market from a weekly perspective, and here we see that over the last couple of tries, the Australian market's been coming back, testing the 50 level on the weekly RSI with uniform activity bounce. Here, uniform activity bounce support for that re-entry, and over the last 2-3 weeks we bounced on the 50 level and the market is coming back. So we can also see that here we haven't seen any major sell signal. Keep in mind that if you take a look at the price channel on the weekly, should look something like this. We seem to be stuck above this line, so we haven't seen any major breakdown. So the market continues to be healthy as of this recent break or this recent support on the weekly time. If we take a look at the daily, I believe the daily, after coming off the support here around the 200-day moving average, is coming back to a level where we could see resistance. A simple line was the break level over the last couple of months, going back to last month. So this actually August, this break off the highs of 2016, we can draw a line from there and we see that the market is coming back to test that level. So it could make sense that this is where it stalls after a nice move off the lows somewhere here. Remember, we've been holding the view that net the Australian market is perhaps one of the main markets that has already given us a sell signal based on the top side resistance on the monthly chart, multi-year data, and also coming back to test the previous recent break level. And so we extend that red line like that. So this was the break off the highs of 2015. Here we came back and hit that level at the highs of 2016. So on the monthly chart, this chart does continue to show that the market should be, for the most part, pressed down due to the resistance on those two lines. Take a look at the Chinese market. We can see that it is also showing that it is stuck in a wedge. You can see the daily chart showing top side resistance and bottom side support. So we are stuck in this wedge. At some point we might move above that wedge for a move higher, or we might break down for a move lower. Again, lots of markets showing this type of wedge formation, and we can also see similar type action as far as the Japanese market is concerned. Again, on the daily chart, we got top side resistance and bottom side support. At the conclusion of this wedge, we might get a breakout for a nice move higher for the next major swing trade, or a breakdown for the next major swing trade being down. So we have to wait for those to resolve. If we take a look at the Indian market, which was down about 2% this past week, and we can see right now that we have what looks like double top rejection. As the market tried to move above 69.1, it was rejected here and here. Again, that RSI resistant at 69.1 could be the reason why we are seeing this pullback. Keep in mind we also saw a short-term trend break based on this RSI support on the weekly. So once we broke through that, we see this 2% slide. Also, let's not forget that right now we are seeing that it did attempt to break out over the last couple of weeks above the previous, in fact the current all-time weekly closing high. So there's a failed breakout there. That weekly breakout attempt failed, which is not a good sign. Means the market ran out of momentum, and of course now we can see the side effect of that. So failed breakout when attempting to move above the previous all-time weekly closing highs, and also there was a breakout attempt above this recent weekly closing high. So at any rate, that's a failed breakout. Failed breakouts are notorious for taking markets lower. And keep in mind also we see a failed breakout on the monthly chart. It's not a good sign, because right now the breakout attempt above 8844.60 failed. It's not good. And also look at the RSI. If we draw where the RSI is coiling down, it's a simple line but with a lot of information. If you draw that line where we are seeing resistance in the current market here, it's not a good development, because the biggest drops, for example this drop here, even you can say this drop, and even this one, or even this one here, all this bear market began with a break below that red line. Break there in 94 for a sell signal there. We broke down here for the highs early 2000. We break down here again in late 2007 for the highs there. We failed to move above that level for the highs here. So this captures very well even this most recent slide came with a break on that red line area. So the monthly chart by itself is telegraphing a market that could easily go into a major bear market phase that might last many months, if not a couple of years. Now that's not all. That just sounds bearish. I'll give you a reason why around here the market might find support, since the market has come back to test the current support level, and I'll show you the support. If you take a look at where the movement of the lows began, you can see that this was the RSI movement that corresponds nicely with the intraday lows here, late February, early March. Of course, the market has gone on a nice recovery run since then. We are still higher, so we draw a line from here, which I call the uniformity line. You can see that right now the market did have a nice blip and a positive close on Friday, showing that it is already trying to find support on this green line. So that's good evidence of a market wanting to find support. If it can hold, then this is where you might start seeing a recovery after the most recent pullback. I also noticed that on the 8-month hourly chart and on my hourly charts, I tend to use RSI setting of 26, just in case it looks a little bit different from yours. But if you take a look at this chart, you can see evidence that the market did come back and is testing this trend line support that connects the lows here, lows of February, these lows here of late June, lows there, and now here. So we are seeing evidence that hour to hour the market is doing its best to find support. So as long as the daily support line holds, and as long as this hourly support line holds, this market might have seen the reason to go down, but we have evidence of the next swing trade being to the upside unless the daily support fails and unless this hourly support fails. So expect a bounce unless the daily support fails or the hourly support fails. Don't forget that if the hourly and the daily support fails, let's be very aware that the line we drew here, if the line does not hold, in other words, if the monthly chart continues being this bearish and the dailies and the hourlies break down, that's gonna be confirmation that this is what is controlling the market and that we should start really preparing for a major drop over the next couple of months. Here's another market showing almost the same type of a setup, and it is the South African market. We see a breakout attempt that failed. So here there was a breakout attempt that failed, and that came with declining RSI strength. That negative divergence month to month might set the stage for a major correction. Also, just like we saw with the Indian market, if you take a look at where the RSI is showing resistance and go backwards, let's do this correctly. So draw a line somewhere around there, and you can see that it corresponds, for example, very nicely with the break of the RSI trend in early 2008. Again, that also corresponded with this RSI trend line break. So failure right now around current levels on the monthly chart for the South African market is not looking very good. And like the Nifty, we can see here there was a breakout attempt that failed. So you put all those things together, we got failure here to break out, failure to break out on this week, failure to break out again, and then even this was a failure to break out. And now we are seeing the result of that. It's the market already showing weakness by moving low. So markets here, that's why I was saying, even though some markets are sideways, when you look at the big picture, markets are pointing to a continued pullback at the current setup. Remember, we began the video by saying there's lots of wedges all over the place, and here we can also see that for the EuroNext, ticker symbol N100, the price is showing a wedge going back somewhere, wedge like that, nicely connecting with the weekly closing highs here, here, and here. And also, if you take this weekly closing low and this weekly closing low, you get another wedge. So we are stuck in this range. Eventually, we are going to either break down or break out for the next meaningful swing trade. Also, the RSI is showing the same type of wedge, top side resistance, bottom side support. So ultimately, we have to wait for all that to resolve. And this is pretty much a conclusion of what the DAX is looking like, the French market, and also the FTSE. All of them pretty much can be summed up by this weekly chart. Now, you can see this if you take a look at the DAX, the German market. Take a look at this chart here. You got top side resistance, and also you get this wedge, if you want to draw it like that, or the RSI. You can either draw it this way, showing top side resistance, bottom side support. So at some point this has to resolve, either for a breakout or for a breakdown. So right now we are at the mercy of the market as we wait for the conclusion of these wedges. If we take a look at the FTSE, we can see this breakout attempt above 2016's weekly closing high right now seems to be failing. So if the market is to see higher prices, it needs to take out the recent weekly closing high at 6916.02. Without a breakout, eventually this is going to have to roll over, and we should not underestimate this seemingly negative divergence on the weekly RSI. As long as this is showing negative divergence, one can expect a pullback based on this weekly chart. On the daily, you can also see another wedge on the daily. You can see this wedge here if you take the daily closing highs, and also here. So we are stuck in that wedge. Eventually we have to resolve one way or the other. Personally, I think it resolves lower, because if you take a look at the recent break here on the daily, coming off the recent 2016 daily highs, so the break here brought the market off the highs, and so we draw a line from there. You can see that ever since that line was formed, the market's been stalling on this red line, and over the last week or so we've hit that line twice. So day to day, that's why I'm saying, even though we're in a wedge, I lean towards markets pulling back based on evidence. For example, this daily chart. So that's one view on the daily. The other view, you have to go and take a look at the Canadian market doing its best to break out above the recent weekly closing high for 2016. So the level to watch there is 14,795.70. So right now it is below that. It needs to break out convincingly if the bulls are to continue adding on to current price highs. Keep in mind this breakout attempt is coming with the RSI making a lower high. So that negative divergence could set the stage for a pullback. And as we have discussed, many charts are showing this type of wedge. You got top side resistance, bottom side support. We are stuck in that wedge. Also, you can see the RSI showing top side resistance, which is why I say as long as the daily charts cannot move above the top side RSI resistance line, one can still expect a pullback. Otherwise, bulls need to push through this line. Otherwise, failure to do so, we can start leaning towards a market that wants to pull back. Now, keep in mind, if you take a look at the long-term picture for the Canadian market, and here we have a 17-year monthly chart, so 17 years worth of monthly data, and we can see that it's coming back right now, still holding around the level where a stall could not be good. Why do I say that? You can see this break off the highs of 2008. So this break right there brought the market off the highs there, and we went into a major bear market, of course, as we can see here. And so we draw a line from there, because every time we see uniform activity rejection on this line, it tends to be for a major sell signal. We went above the red line and back below it with uniform action for the sell signal here. And we can see recently there was another break right here. That break corresponded with the movement of the highs, and even this high. Since then we went on a major bear market. We are trying to recover, but what I'm saying here is, if the monthly chart fails, keep in mind we are going to begin a new month. If this turns down for the month, it's going to be confirming resistance on this red line, which is not a good sign. And one thing we also need to remember here is that this monthly chart resistance line that I'm talking about happens to be at about 61.8 on the monthly RSI. In other words, resistance around this red line would be mucho bearish. Let's take a look at the Brazilian market by way of the EWZ. We've been saying this for many weeks, that the market has come back to test this break line, the break line that brought the market off the highs. So this break brought the market off the highs here. We've been drawing a line from there, and you can see that we are still we did see resistance here for the highs there in 2014, and we are already coiling as we approach that line. So resistance around current levels would be bearish month to month. We've been talking about that. There's also another line connecting recent monthly RSI highs, if we draw it like that. So all this is pointing to potential resistance on the monthly chart. And again, keep in mind, if you take a look at the fact that we are closing the month of September 2016, as we go into the new month, the more this is confirmed as resistance, the more we can expect a major reversal around current levels. Otherwise, the bulls have work to do, in that they have to push the market through those resistance levels. Otherwise, here we might see a stall in the coming months. Currently, we take a look at the Brazilian market from a day-to-day perspective. On the daily, you got this wedge, just as we've seen across the board on many world markets. At some point, we might break out, or we might break down. And so we have to wait for the conclusion of this. Net, as I've been saying throughout this video, yes, we are stuck in a range, but my general consensus here, my feeling is eventually the wedge formations might break to the downside. Of course, we shall see. Otherwise, be on the lookout for my US Part 1 market analysis. Subscribers, be on the lookout for Part 2 of the US market analysis, which includes a coverage of the US markets, and also some stock ideas, and of course our coverage of commodities as usual. Eric Muathe with muathe.com. As always, good luck and good night. Good, or maybe good luck and good day. Peace and blessings. I am out. Mwah. Eric Muathe with muathe.com with world market analysis for the weekend of September. No, not September. We are going into October. October.